Hello, G-traders! Our analysts are ready to present you with the breaking news, ongoing trends and the forecasts. Let's go! The Fed's decision on gradual monetary tightening did not spook investors because it cleared up the Fed's agenda. Now investors are aware of the timeline for further rate hikes. No wonder the stock market perked up. Following the policy announcement, Wall Street closed with gains on the same day. On Thursday, the major US stock indexes grew at the same degree. The Nasdaq climbed 1.3%. Both the Dow Jones and the S&P500 rose 1.2%. The ongoing positive dynamic on Wall Street proves that the Fed's monetary policy is less scary for investors than geopolitical uncertainty. Today, the S&P is expected to test resistance at new 4,375 points. A further move from this level will indicate a direction. The corridor for the index is defined between 4,360 and 4,420 points. Apart from the aftertaste of the press conference, the stock market found support from better-than-expected macroeconomic data. US first-time unemployment claims declined to 214,000 last week. The housing market did not lose momentum. Market sentiment this week largely depends on the Russia-Ukraine talks. If the parties are ready to search for a diplomatic solution, the stock market is able to develop a new bullish wave. Investors overcame the initial shock as they are aware of the Fed's policy moves and the US economy is on a sound footing, so market participants can adjust to a new reality. As investors are regaining optimism, the US dollar is getting weaker. Its index extended a slight, having dropped to 98. It's expected to trade in the corridor between 97.60 and 98.80. The greenback owes its downward move to some signs of hope for a peaceful solution in the geopolitical crisis and the moderate rhetoric of the US Fed. So, the US dollar is losing its footing. It seems probable that investors will be willing to resume buying risky assets. The market participants are still worried about political and economic jitters. They welcome diplomatic rhetoric. If this trend goes on, the US dollar index could tumble as low as 95. At the same time, any escalation is sure to cement the US dollar strength. To sum up, the greenback is likely to weaken today. The Canadian dollar is taking advantage of temporary weakness in its American rival. The USD CAD pair slipped to 1.2650 yesterday, closing at the strongest level since January 25. The reasons are obvious: easing geopolitical tensions and waning demand for safe haven assets. The currency pair is likely to trade lower inside the corridor between 1.25 and 1.27. Today, the loonie was propped up by fresh macroeconomic data on retail sales in Canada. Even amid raging inflation, retail sales increased better than expected to 2.5% in January, higher than expected 2.4% growth. While a lot of trading instruments are reversing their trajectories, Bitcoin has been locked in a range. The flagship crypto has shed 0.19% but remained inside the trading range between $39,000 and $41,000. Crypto traders hesitate to buy risky assets. Market sentiment on Bitcoin is still uncertain. Crypto traders have two scenarios for today: either to push the price towards the low of 32,000 or to break the high of $45,400. The first scenario will open the door to $38,000, and alternatively, Bitcoin will be able to rally in a case the price settles $42,100. And that's all for today. All in all, Wall Street is trying to adjust to a new reality amid geopolitical tensions. Further talks between Russia and Ukraine will mitigate risks, so investors might be willing to return to risky assets. In any case, it's too early to speak about optimism on Wall Street. until the parties reach a peaceful solution. Keep track of important news on InstaForex TV channel and see you next week.